Hello and welcome back to With here. As part of the stock market series, here's another very interesting series called Analyzing a Stock. Analyzing a stock involves two-pronged approach, combining fundamental analysis and technical analysis. In this video, we will discuss fundamental analysis. So buckle up, make sure you have subscribed to With here, and let's get started. Fundamental analysis is a method of evaluating a security such as a stock by attempting to measure its intrinsic value by examining related economic, financial, and other qualitative and quantitative factors. The goal of fundamental analysis is to determine whether a security is overvalued, undervalued, or fairly valued by the market, and thus whether it represents a good investment opportunity. In the stock market, fundamental analysis plays a crucial role in the investment decision-making process for both individual and institutional investors. Let's delve deeper into the concept with an example involving a prominent Indian company, Tata Consultancy Services or TCS. Now, TCS is one of the largest information technology services and consultancy and consulting companies in India, providing a wide range of services including IT consulting, business solutions, and outsourcing. It's listed on the Bombay Stock Exchange or BSE and the National Stock Exchange or NSE. Let's talk about the components of fundamental analysis. Number 1, financial statements analysis, which includes the income statement. Examining TCS's revenue, expenses, and profitability over a period, like quarterly or annually, helps in understanding its revenue growth trajectory, cost management efficiency, and overall profitability. Balance sheet. Analyzing TCS's assets, liabilities, and equity provides insight into its financial health, liquidity position, debt levels, and the ability to meet short-term and long-term obligations. Cash flow statement. Studying TCS's cash flows from operating, investing, and financing activities helps in assessing its cash generation ability, capital expenditure, dividend payments, and debt servicing capacity. Number 2, ratio analysis. Profitability ratios. Calculating metrics like return on equity or ROE, return on assets or ROA, and net profit margin helps in evaluating TCS's profitability relative to its assets, equity, and sales. Liquidity ratios. Analyzing ratios such as current ratio and quick ratio reveals TCS's ability to meet its short-term obligations using its liquid assets. Debt ratios. Assessing metrics like debt to equity ratio and interest coverage ratio indicates TCS's leverage levels and its capacity to service debt. Number 3, industry and market analysis. Industry trends. Understanding the broader trends in the IT services industry such as technological advancements, demand dynamics, and competitive landscape helps in contextualizing TCS's performance. Market positioning. Evaluating TCS's market share, client base, geographical presence, and competitive advantages provides insights into its positioning within the industry. Number 4, management evaluation. Corporate governance. Assessing TCS's corporate governance practices, board composition, transparency, and management integrity helps in gauging the trustworthiness of the company's leadership. Management guidance. Reviewing management commentary, earnings calls, and strategic initiative offers clues about TCS's future prospects and growth trajectory. The application of fundamental analysis on TCS. Number 1. Financial statement analysis. The income statement. By analyzing TCS's income statement, investors can track its revenue growth, which might indicate the company's ability to win new contracts or expand existing ones. For instance, if TCS consistently reports double-digit revenue growth year over year, it suggests strong demand for its services. Balance sheet. Examining TCS's balance sheet helps investors assess its financial stability. If TCS maintains a healthy balance sheet with manageable debt levels and ample cash reserves, it indicates financial strength and resilience, reducing the risk for investors. Cash flow statement. Analyzing TCS's cash flow statement allows investors to evaluate its cash generation ability and capital allocation strategies. If TCS consistently generates strong operating cash flows and efficiently utilizes its cash for investments or returning value to shareholders through dividends or share buybacks, it indicates sound financial management. Number 2. Ratio analysis. Profitability ratios. Calculating metrics like ROE and ROA helps investors gauge TCS's ability to generate profits relative to its shareholders' equity and total assets. If TCS maintains consistently high profitability ratios compared to its peers, it indicates operational efficiency and competitive advantage. Liquidity ratios. Assessing TCS's liquidity ratios ensures that the company can meet its short-term obligations without facing liquidity constraints. If TCS maintains a current ratio above 1 and a quick ratio that exceeds industry benchmarks, it indicates a strong liquidity position. Debt ratios. Analyzing TCS's debt ratios helps investors assess its leverage levels and debt servicing capacity. If TCS maintains a conservative debt to equity ratio and a healthy interest coverage ratio, it suggests prudent financial management and reduces the risk of financial distress. Number 3. Industry and market analysis. Industry trends. Keeping track of trends in the IT services industry, such as the adoption of cloud computing, digital transformation, and cybersecurity, allows investors to evaluate TCS's growth prospects and competitive positioning. If TCS demonstrates expertise in emerging technologies and adapts to industry trends effectively, it enhances its long-term growth potential. Market positioning. Analyzing TCS's market share and client relationships helps investors assess its competitive advantages and customer loyalty. If TCS maintains a dominant market position and a diversified client base across industries and geographies, it reduces the risk of revenue concentration and enhances its resilience to economic downturns. Number 4. Management evaluation. Corporate governance. Assessing TCS's corporate governance practices, such as board independence, transparency, and adherence to regulatory requirements, requires that investors can trust the company's management. If TCS maintains high standards of corporate governance, it enhances investor confidence and reduces the risk of governance-related controversies. Management guidance. Monitoring TCS's management commentary and strategic initiatives provides insight into its future growth prospects and execution capabilities. If TCS's management provides clear guidance on revenue targets, margin expansion strategies, and investment priorities, it helps investors make informed decisions about its long-term prospects. In conclusion, fundamental analysis is a comprehensive approach to evaluating stocks like Tata Consultancy Services in the stock market. By analyzing financial statements, ratios, industry trends, and management quality, investors can assess TCS's intrinsic value and make informed investment decisions. However, it's essential to combine fundamental analysis with other methods like technical analysis and market sentiment analysis for a holistic investment approach. Feel free to share your views on the topic in the comments below. And if you like the video, do give it a thumbs up and share it with your family and friends. Thank you for watching. See you in the next video. Till then, happy and safe investing.